Hello, traders. This is Chris from AAAFx taking a look at the upcoming January 1st week. Needless to say, Monday being January 1st or New Year's Day, nothing's going on. The markets are closed. You're going to be hard pressed to find any trading going on globally, with maybe a few random exceptions, perhaps in the Middle East. But to be honest with you, even I don't know that. So with that being said, we have a scenario where Monday is definitely a day we're going to look past. The Japanese banks and the Swiss banks are also closed on the 2nd, which is Tuesday, so keep that in mind. Tuesday is going to feature a lot of mid-level PMI type numbers. We get the Caixin out of China. We get Spain, Italy, France, Germany, EU final manufacturing PMI, as well as the money supply coming out of the EU, private loans. And then after that, we go into the UK, the United States, and Canada for PMI numbers. They all just kind of come in a huge bunch during the Tuesday session. Looking forward to Wednesday, we finally start to see a little bit of momentum when it comes to economic indicators. That being said, Japan is still away on a bank holiday. According to the calendar here, the Japanese will be observing a 4-day break for the New Year's. That being said, we do have a member of the FOMC, Barkin, speaking during the day on Wednesday, but ultimately the real headlines of the day are going to be the ISM manufacturing PMI numbers, expected to come in a little hotter than they did last month at 47.2. JOLTS jobs openings. Now, this is something that a lot of traders overlook at their own peril, basically, because it is an indication of potential inflation. If there are plenty of jobs out there, that means that there are plenty of opportunities for consumers to make money and therefore spend more money. So it's expected to be 8.85 million. It's been extraordinarily resilient, and it's been part of what's been causing the Federal Reserve so many headaches. Late in the day, 7 p.m. GMT and 2 in New York, we get the FOMC meeting minutes of the last meeting. That's going to be interesting because the dot plot suddenly moved at the last meeting. So I think a lot of traders are going to look into that, and I suspect this is going to be one of those situations where, unfortunately, no matter who you are, no matter what you think, bullish or bearish, higher rates or lower rates, there's probably going to be a little something for everybody in that report. So expect a lot of noise in the market right around that time. Thursday, we start to look at services PMI numbers, and much like Tuesday, we get France, Spain, Italy, Germany, EU. We get the money supply coming out of the UK. We get the PMI numbers coming out of the UK. We also have a couple of mid-level bond auctions in the EU. German preliminary CPI, though, probably the big headline number in the morning. See how that inflation is going. Expected to be 0.2, but last one was negative 0.4. So is inflation picking back up in Germany? That'll have pretty significant influence on the euro, I suspect, because as we have left things off, the ECB claiming not to be anywhere near cutting rates. But if we start to see inflation tail off, we could see an argument made that perhaps the euro will get hit. The ADP non-farm employment change. Now, this is like the jobs number, but not really, mainly due to the fact that the ADP is based almost solely on private numbers. ADP is a big processing company in the United States. So if you own a large corporation or a mid-sized corporation, you have like 90 employees. A lot of times people will farm that information out and they'll have them cut checks and stuff. So the ADP is like a good look at mid-size and private businesses. Unemployment claims, the Thursday number expected to come in at 210. in the United States. We'll have to see how that plays out. Could be a mover. But really, the next big mover is going to be non-farm payroll and jobs numbers, both coming out of Canada on the and the United States on the 5th on Friday. That obviously moves the market quite drastically. We'll have to wait and see how that plays out. ISM services PMI, of course, could give us another look at inflation. But generally, when you get these ahead of something like that, this one, unless it's like way off a base, gets overlooked. It'll be interesting to see how this plays out. Obviously, ground zero of all of this will be the dollar Canadian dollar currency pair, but this will move everything. So as we end the week and start looking at the next week, you can see that the euro has overshot a little bit over the 110 level. When I look at the weekly chart, the shooting star does jump out at me. Now, is this terminal for the euro? Probably not. Wouldn't surprise me at all to see a pullback. If we break 110, 109.5, and then eventually 107.5 could be targeted. I don't know that we break anywhere below there anytime soon. A little bit of sideways consolidation could make a certain amount of sense, but if we take out the top of this candlestick, then the 1.1250 level could be targeted as a major resistance barrier, and of course, the 61.8% Fibonacci retracement level kind of all ties together quite nicely to show signs of resistance. The gold market been a bit messy as of late. Much like the euro, and for the same reasons, has ended up forming a shooting star. This is all about interest rates in America. We did break above that crucial 2075 level, only to turn around. It looks like we're trying to squeeze to the upside. So it'll be interesting to see how this plays out, but I think this is going to be more of a buy on the dip market. You can make an argument to short the euro. You have a really hard time shorting gold, I think, at least at the moment. We could pull all the way back to 2000, and I really don't think it would change much. Silver fell on Friday. The weekly candlestick looks kind of benign and sideways. I think we're going to stay in this overall consolidation area between 22 and 26. And why not? That's been the bulk of trading for the last 3 years. Yes, we've had a couple shots here and there, but for the most part, this has been a fairly reliable range. We're right in the middle of it. So I think silver is probably a market that you could more or less overlook at the moment. Bitcoin, you can see, has been consolidating for quite some time. The weekly candlesticks don't look any different. I do think eventually we'll find buyers to go looking towards the $47,500 level, but you're going to have to be patient. It will do it in its own time. You know, one of the biggest mistakes that traders make is they try to force things. And the reality is, you know, the market does what it wants to do on its own time frame, and you just simply have to deal with it. 40,000 underneath offers a significant amount of support. 38,000 offers support as well, so keep both of those in mind. Ethereum, kind of a similar situation as the Bitcoin market, as you would expect. Let me go ahead and go to the weekly chart. You can see we're seeing a lot of noise here. We had previously been in a sideways kind of grind and then eventually an ascending triangle. But here, I'm going to mark a line here on the chart at 2,500 because I think ultimately that's going to be the sign that we're going much higher. Based on the measured move, it does measure for something off the top of my head, if I remember correctly. Let's do it this way. You measure the height of the overall triangle on the breakout, and it suggests that we could go to about 3,300. I think that's reasonable if we continue to see, and this is going to be the big thing that most crypto traders miss, if we continue to see interest rates drop, because this is extraordinarily speculative kind of sector of the markets. A pullback makes a certain amount of sense, but I think somewhere around 2,100 buyers come back in. Dollar yen, you can see, has been drifting lower on the weekly chart. It's trying to hang on to this trend line. I think at this point, you're probably going to have to wait for that jobs number to get any type of clarity. The first couple of sessions could be very noisy. We'll have to wait and see. We're definitely at an inflection point. Aussie dollar closed out the year with a somewhat negative candlestick, although we did recover some of that. But look at this weekly candlestick. Again, we're seeing a shooting star. This time we're near significant resistance. So to me, it's starting to show a pattern of potential U.S. dollar strength, at least in the short term, or maybe a reprieve of U.S. dollar selling might be a better way to put it. That being said, this is a pretty decent technical setup for the Aussie to be shorted. We'll have to wait and see. But if we take out 0.69, then 0.70 and 0.7150 could be your next couple of targets. I do think that underneath we have the 50 offering 50 week offering significant support. So somewhere around 66-ish, I would expect buyers to come in and try to pick up value. So over here in the crude oil markets, this is the WTI or the U.S. oil market. You can see we gave up initial gains for the week once we broke above $75. Now, I think there's a big battle going on here that we need to be cognizant of. Essentially, when you look at this chart, you can see this is an area of support from 68 to 65. And I think if we continue to see this type of action, we could eventually form a bottom and then rally. I mean, this would certainly be an area that would be a good candidate for that. That being said, I also recognize that this is probably going to be a very sloppy affair. It might be something like this or this. I'm more inclined to buy dips, but not with big positions. When you look at Brent, it's the same chart as you would anticipate. 72 to 70 is your floor. Really, at this point, there are a lot of concerns about the global economy. But on the other hand, if central banks around the world are going to start cutting rates, especially the Fed, that in theory has people looking for economic growth, expansion, etc., which of course demands more oil. So we'll have to wait and see how that plays out. We also have the wild card of oil not being able to be transported through the Red Sea. That does have a certain amount of influence as well. S&P 500 finished the year with a negative candlestick, but this thing, much like all other U.S. indices, has been straight up in the air. Again, though, notice that we have a little bit of a shooting star at resistance, hinting that as the U.S. dollar picks up strength, the S&P 500 may fall. Perfect. That's a great thing because it's gotten overdone, which your job at this point, hopefully, is going to be to pick up little bits and pieces of value underneath. 4,700 would be an area of interest for me, and then 4,500. Dollar Canada could be a very interesting place this coming week. You can see we are trying to bottom as we head towards those crucial jobs number. Notice the weekly candlestick. This suggests to me that we are getting to an area where value hunters are coming in. If the Canadian jobs number ends up being poor and the US one being at least what expected or maybe a little bit better, that's going to be like rocket fuel for this pair. Also keep in mind that the Canadian dollar is highly sensitive to the oil markets as well. Next chart is the dollar Swiss franc. Notice two hammers in a row. We are getting very, very stretched to the downside. This is the monthly chart. The Swiss National Bank has a long history of intervening quietly and then all at once. I suspect that something is going on down here. Therefore, I don't like the idea of shorting this pair. The DAX looks like it's trying to turn around and continue to rally. However, it's had a pretty strong rally as of late. So I think what you're going to see here is perhaps more sideways action. Certainly wouldn't want to short the DAX. So Germany has been very strong. In the UK, we have a market that is reaching pretty significant resistance. A little bit of a pullback would make a certain amount of sense. Probably going to see value hunters coming in at 7,500 if we can get anywhere near there. Breaking above 7,800 opens up a move to 7,900. The Dow Jones 30, which I cover daily here at AAAFx, doesn't recognize gravity anymore, and you can see it's just gone straight up in the air. Obviously, a market that you can't be a seller of. Really, this is, Jesse Livermore, one of the greatest traders of all time, said, we get paid to wait. So the market's told you what direction it prefers. And if you're not involved now, it's simply a matter of trying to find some type of value. 37,000 is a possibility. 36,000 is much more interesting to me because of how far we've gone. If that US dollar starts to take off, that is going to put a beating on stocks. And that might be just what we need. We'll have to wait and see. There's going to be a big argument as to whether or not rates are going lower. Wall Street has convinced itself rates are going lower for the last couple of years, so we'll see. This is the British pound. You can see we broke above 1.2750, gave back some of those gains, though. So for me, it looks like we're going to probably enter a bit of consolidation. Taking out the high of the weekly candlestick, though, opens up a move to 1.3150. Would coincide with U.S. dollar weakness. If we see U.S. dollar strength across the board, then the pound might outperform some other currencies, but that doesn't necessarily mean that it's going to be positive. The Nikkei continues to kind of just slog sideways. The weekly candlestick shows that we will probably see a little bit of a pullback and more of this same kind of consolidation chop. Clearly, and this has been the case for a while, 34,000 yen is crucial. We need to break above that to continue going higher. The NASDAQ 100 has had an interesting week. We have formed a perfect shooting star right here after breaking the highs. What this tells me is we are more likely than not to see some type of pullback at this point, and therefore maybe a little bit of relief. It's not necessarily that I like shorting the NASDAQ 100, but I do know how volatile this thing could be. I'd be more interested in buying maybe closer to 16,000. So that's an 800 point hit. Sounds like a lot, but it really isn't. It's doable, especially in this type of an environment where we have seen nothing but insanity when it comes to the actual momentum. You can see like down in this area here, you could make an argument for a lot of previous support. British pound, Swiss franc is going to be a lot like a lot of the other Swissy related pairs. When I look at it on the daily chart, you can see a little bit of a lift as well. I'm kind of torn with the Swiss franc mainly because we could have a situation where the S&B is up to its old games, or maybe it's just simple profit taking. Or it could be a combination of both. So I don't know that I'm willing to short the Swiss franc, but I certainly wouldn't be a buyer of it, meaning shorting these Swiss-related pairs. Not down at these lows. There are easier ways to make money in the market right now. That being said, keep in mind that liquidity is going to be a bit of an issue next year because, quite frankly, the liquidity issues multiply when you have big money coming in to set up positions for the year. The first week or even two of January, under the best of circumstances, tend to be a bit noisy. And I think this year won't be any different, especially after we've had this big run higher in so many of the stock indices. That has completely distorted the market. Rates have collapsed. I mean, we need some type of stability. It just seems like the market is all one way or all the other. And eventually, if you do that enough where you go back and forth, you break something. And I think that's what we're going to see in 2024. When that is, I don't know. I don't even know that we're close to it. But sooner or later, they're going to break something seriously. And then, everything resets. So be cautious. Make sure you use stop losses and keep your position size reasonable.